to Wealth Wisdom Financial podcast, YouTube channel, wherever we're at. We're on LinkedIn. We're on, who knows? It's like a big giant production nowadays. So, what I'm excited about is interviewing a friend and a client who, came around. I when I heard that he was researching this concept, I was like, oh, this is going to be a hard one or an interesting one, and it's going to be a just who knows where it's going to lead, and now he's become a really good friend, a not just a client, but he's been an advocate for what I do, and also he is helping other financial advisors in the other camp, the other side of the world, if you will, in the world of finance. And so today I get to interview James Pollard. Now, James, if you do not know who he is, you should, especially if you are in the financial services world. He runs the Advisor Coach, theadvisorcoach.com. He has a financial advisor podcast show, the Financial Advisor Marketing podcast show. And he does all things marketing, like he knows marketing. Yeah, he learns from the best, and he does his math, right? He knows how to read metrics, and he knows how to read things. Well, now the one thing I want you to know is that he does not sell insurance. He does not isn't in assets under management thing. He does not do any of that stuff. However, he just helps us be better communicators. And so, with that said, James, welcome to Wealth Wisdom Financial Channel.
Hi, good to be back. Well, not back because it was Grandma's Wealth Wisdom. So good to be here for the first time with Wealth Wisdom Financial.
Right? Yeah, I mean, it's one of those things as you do marketing and as you think through this stuff. I didn't know, like confidence wise, I was like, I don't know if I'm that smart about this. And what I've learned as I've grown, I'm like, man, we are pretty good. We do know what we're talking about. We do have some experience in this, and so hence the shift over to Wealth Wisdom Financial. And unfortunately, Grandma, she has retired or is currently being retired. But we're not talking about Grandma. We are talking about you. And the title of this video is Infinite Banking Simplified. So here's the thing. Here's the crux of what I'm learning and seeing as I talk to clients. They overcomplicate this. They think of it bigger. They call it an investment when it's not. And there's just a whole lot of things out there about infinite banking. And you've had to do your research. You're on both sides of the camp. So my
Mhm.
question to you is, how do you explain this, as you even probably hear more than I do about in the financial services world? Like, what are some of the things you hear that you're just like, oh my gosh, this for real, this is not accurate? What do you hear, and how can you make it simple?
Well, so infinite banking is a concept. It's not a product. It is a way to structure your finances and your cash flow. It's not for everyone. It is not a one size fits all solution. It's not an investment. I have low cost, everything from low cost index funds to insurance to real estate to cryptocurrency. Um,
Okay.
Cryptocurrency is, I buy it with the infinite banking policy, but we can talk about that too, because you're buying something riskier with something that is not as risky at all, relatively speaking. But I would say it is a fairly complex topic that is used simply, meaning it takes a lot of time to understand. You're not going to get infinite banking in an hour or 2 hours or even 3 hours. Sometimes, I mean, it took me like a couple months to
Right.
scratch the surface and really internalize. I mean, I get the fact that it's an insurance policy. I get the fact that you're borrowing from yourself. And I get the fact that it's mutually owned, dividend paying, high cash value. I get all that intellectually. But to really internalize how to use it, it took me a little while.
So what took you like to overcome that obstacle? What was something that just said, "Oh, I get it." Like how was it that you were able to overcome that hurdle, that thing, that concept, shift? What was it that changed for you?
Realizing that it was more or less a way for me to personally manage my cash flow, and realizing that you're not necessarily just letting the cash sit there. I personally had a fear of, I had this little gremlin in the back of my mind because I knew going in that the cash value would not be 100%. And if you design it correctly, of course, it's not going to be. The
Yeah.
commission part is actually lower in infinite banking than it is with other insurance sales. A lot of people don't know that, is that people like you are actually making less. You're making less money with this concept than you would be if you did other types. I think it's important for people to know that and realize that. But I had this little fear, like, for example, if I had $10,000 in a policy that I took $10,000 out of a bank and like
Mhm.
Ally or Blue Vine or Wells Fargo, and put it into an insurance policy that I would have, let's just say 7,500 to $9,000. I'm taking a loss on paper in the first couple years. Well, there's this irrational fear that I had. Well, what if I need all that money? But then I started
Yeah.
thinking, well, I have other investments that I haven't touched in ever because I'm a disciplined
Yeah.
saver and disciplined investor. At least I like to think I am. So once I got over that, I realized I'm storing cash anyway. Let me look at what is the most efficient place to store my cash, not just for a year, not just for 2 years or 5 years, but over a lifetime. And I started thinking about what I wanted to do with my cash, which is invest in businesses and my own business too, and real estate and other investments. And it's more or less a holding vehicle for me before making those investments.
So you're saying it's a place that you put it in to then deploy out, is what I heard.
Yes. Yep.
Gotcha. So as you've thought about this, and you've heard about this is something I think we kind of talked about. Uh, so we talked about what infinite banking is. It's a place like that you put the money in. It's a whole life insurance policy. And where do people kind of get it twisted as to what they think it is, but it isn't? What isn't infinite banking that you've heard in like your, I don't know, day to days?
Well, that could be an entire episode by itself. So it's not an IUL. It's not a index universal life. It's not variable universal life. It's not. A lot of people say, here's something common. I've heard people say that you could just borrow from your house in the form of like a HELOC. And sure, you
Yeah,
can, but it's not the same thing. Or you can borrow from your stock portfolio. Yeah, you can, but it's not the same thing. The way that I like to make decisions, this is going to be really nerdy, but and it might be a little bit of a tangent, but I promise it'll make sense if you stick with me. So I use something called a weighted average decision matrix, which is where if I'm comparing alternatives, I will ask myself what is important to me and then assign basically a number to see how important that item is. For example, if I would like to move to New York City or Philadelphia, but I can't decide which one, I would start
yeah,
thinking about the items that are important to me and assign a rating. For example, I could say nightlife is important to me. Well, New York's, and how important is that to me? Well, I would say 10 out of 10. And let's say that New York City gets a 10 out of 10, perfect rating. It has great nightlife. And then Philadelphia gets an 8 out of 10. And then let's say I say public transportation is like an 8 out of 10 of importance to me, but Philadelphia is
yeah,
a 9 and New York is an 8. I would tally up all those scores and I would basically come to a conclusion based on what is important to me as to which city I should move to or live in. I
yeah,
basically did the same thing with financial products. And I asked myself, what's important to me? And
yeah,
cash storage, definitely the legacy part. Like the worst part of infinite banking is the insurance product. I mean, just plain and simple, it is because it's a cost. But if you're going
yeah,
to have the insurance anyway, And you can do term riders. If you're going to buy term and quote unquote buy term and invest a difference, you can get the term added on anyway.
Right.
So I started thinking about that. I started thinking about the protections. I started thinking about that. That's important to me too. And I weighed that against borrowing from a stock portfolio. I mean, I'm not ignorant to the alternatives and a HELOC and just keeping cash in the bank. And it just won the weighted average decision matrix. It really is that simple.
Yeah, I think that there's what do you want your money to do for you, and
Right.
being able to think through that. Now, do you think that people, I mean, it sounds simple. Do you think people actually do the weighted average thing, or do
No,
they,
no.
and why do you think that? Do they, like, why? It's logical. Why wouldn't they do that?
They either don't know what's important to them, or I guess, I mean, or they don't care, or they default to something easier or something someone else is telling them. And unfortunately, I think the last one is probably the most common, is to just default. And
Yeah.
there are a lot of people out there who give great advice, and it's wonderful advice, but the problem is that they haven't dug deep enough to figure out what is truly important to the client. And
Yeah.
that's unfortunate. And I'm not saying that the people are necessarily bad. It's just that they are doing the best that they can with the information that they have. But unfortunately, they're not extracting all the information that they need. They're not figuring out what is important. I have a bit of an unfair advantage. I will admit that, because I know exactly what is important to me, and I knew the alternatives that were available. And that's what I did.
So, how is that an unfair advantage? I mean, if you've been thinking about that and self-reflecting, how is that an unfair advantage, though?
Well, I guess you have a point. It's not necessarily an unfair advantage, but it's an advantage that I had that other people don't and didn't, because they just don't do the work of thinking about what they want out of life and what they want their money to do for them.
Yeah. And then, as you think about, excuse me, about this infinite banking strategy, how has it amplified those other areas of your life? What has it done that you said, I was able to do this better because of this?
So in the summer of 2022, so earlier this summer, I made an investment in some real estate in Florida and used the infinite banking policy for that. And like I said, I've done cryptocurrency as well. Been buying into the dip. Whether people probably think that's a terrible idea, and I know they do. But the point is that that cash it's as if growing as if I never touched it within the policy. So if the
Yeah.
crypto does go to zero, it's not as bad. Now, again, this is not like obviously not financial advice, but it's not as bad as if I just bought the crypto outright with cash. And heaven forbid if something
So,
happened to me along the way, there's a policy component, or a whole life insurance policy component there as well.
So as you think about this, some people might say, I could use a HELOC or a line of credit or other things along there. How is this, and how have you seen this a little different again in your experience, um, different than taking a line of credit, or that side of the business too, on the assets under management side, like maybe using the your stocks to do the things. How is this different?
Well, let's take a look. I have a stock portfolio that I can borrow against. I would check my actual rate. I'm not going to show you my account or anything. So I can borrow a certain amount of money. So this is about a third of the total
Hmm.
amount of the portfolio. So I can borrow a third at a 7.4% interest rate. This is literally my investment account, and I'm checking right now. Um, with the infinite banking concept, I could borrow in my policy. Again, it would be different for other people, but in my policy, about 80 to 85% of the cash that I put in, and that interest rate would be 5% simple interest. So it becomes a math equation, meaning 5% is less than 7.4. Now, I understand that people could project that over the long term, stocks will go up more than the insurance policy. But again, the insurance, the
Yeah.
infinite banking concept is not an investment. They will be separate. The point is, if you want to use cash for something, whether to buy a car, to buy a house, or buy real estate,
Yeah.
or buy investments, if you're going to use cash, that's my point, is I would like to have that cash to be in the most efficient vehicle possible over my lifetime, not years.
Yeah.
Because if at this point I could put cash in a bank account and earn like 3 or 4%, and in the short term, it would decimate the infinite banking policy, but not over my lifetime, and certainly not at
Yeah.
death.
So you're saying measure the short and long term at the same time almost.
Absolutely. And there's a chance that the value of the stocks could go down, and you would encounter something called a margin call. And we don't want to go into that, but you asked
Yeah.
about HELOC too, and I feel like I'm doing a disservice by not answering that. So let's Google HELOC interest rates as of today. So this is December 9th, 2022. And according to Bankrate, it says as of December 7th, 2022, the current average home equity loan interest rate is 7.74%. Again, this is less than 5% simple interest. And if I borrow the money, I continue to get a non-guaranteed dividend from the policy, and I'm
Yeah.
getting that dividend, but I'm paying 5%. So if you calculate your net total cost to borrow, it's significantly less. I'm just saying 5 because it's an easy number, but the actual number when you calculate your net, it's less than that.
So what'd you say the average HELOC interest rate is?
So according to bankrate.com, as of December 7th, 2022, it's 7.74%. I just Googled it.
7.74. So and we just, again, it's according to bankrate.com. So again, I'm not saying which is better or not, right? And then you never should say what is better. It's just, again, doing what's right for you.
Yeah,
But average
exactly.
HELOC interest rate is 7.74. So if you use your line of credit, which people do all the time, as a HELOC for buying assets or refinishing their house to then sell it, it costs more money, it seems, to do those things than to do a policy. So
Well, right
what I
now,
think
yeah.
about, yeah, and what I think about with the policy is, you are the line of credit. Instead of the house being the asset, you're the asset, and you're able to leverage the asset to create more assets.
Well, there have been
Um,
academic papers. I don't remember the exact one, but there's there was one which suggested that the optimal strategy over someone's lifetime is to buy and hold investments with leverage. Now that may be true, but people don't do that. That's not the real world. People aren't they don't have the stomach to have leveraged losses in their stock portfolio, and it would take nerves of, not, I wouldn't say steel, I'd say nerves of diamond to go
yeah,
all the way to zero because you're leveraged, if that happens, and start back up again doing the same thing. So you would require nerves of diamonds. So you have to balance what is practical versus
yeah,
what you're actually going to do. Um, People, for example, there's a quote from the Psychology of Money book, which I totally recommend. I know you've read that as well.
yeah,
That
yeah,
paying off, now this is someone who is brilliant about money, someone who lectures about money, someone who literally wrote a book about the psychology of marketing, and the author Morgan Housel and I love Morgan's work, by the way. He confessed that he's paid off his house. He said it was the worst, or I can't remember if he said it was the worst or one of the worst financial
yeah.
mistakes he ever made, but one of the best money mistakes, or one of the best money
Emotional.
decisions
Y-
he's ever made.
Yeah, emotion. It was like an emotional thing
Hmm.
versus just a money decision, and that's something I think about when we think about money, the market. A lot of times it's led by emotion, and not just definitely math, right? And so as I work with clients, sometimes they really want to paid off house, and just showing the math and saying, well, logically, if you did it this way, you'd have $30,000 more in retirement, but they'd rather pay it off because of an emotional thing, right?
Right.
Uh, and that's the thing that I liked of hearing about it or in that book was sometimes our emotions are a driver and math isn't. And I wonder if that's a lot of how the market, how Wall Street runs things is more by emotion than by actual math. You see that?
Yeah, quite a bit. Now, like I said, I have both. I have all. I don't sell insurance, and I don't really have a dog in the fight. So I'm not here like, hey, you should do the infinite banking concept. I'm just saying that I do,
Yeah.
and I benefit from it. But I will say it's not the only thing I do. And
Hmm.
just like I said, it was just it's a holding place for cash, for capital,
Yeah.
as a business owner and as an investor that I can use when it's opportune for me. Here's a thought experiment that I think everyone could benefit from. Uh, First of all, I should say that very few people actually, when it comes to investing like the Wall Street way,
Yeah.
you're supposed to, meaning over the long term, the best results come from dollar cost averaging, which is putting the same amount of money into your portfolio regularly, no matter what. And I do that, and I have been doing that for a while. And that's how I started thinking, well, wait a minute, I've never touched this money. So why am I so afraid of losing money in the cash value? But that is what you're supposed to
Yeah.
do. Most people do not do that. When the market's going up, they get a little bit more excited and they buy more. Or the reverse is true when the market goes down and they think, oh, the market is on sale, let me buy more. Then the market goes down even more, and they've effectively tried to time the market. You can't do either. You
Yeah.
can't try to buy as it's going up, and you can't say, oh, the market's on sale, let me invest more. No, that's timing the market too. And, but anyway, the thought experiment that I wanted people to try is to take a look at your bank statement. And the reason I brought up dollar cost averaging is because unless you're dollar cost averaging a percentage of your income every single month, then you're going to have cash accumulate. Well,
Yeah. Yeah.
how long have you had the cash sitting in your account? And what did you use it for? And when did you use it? You start to realize pretty quickly, or at least I did, that I was holding cash because um, thankfully I've been blessed to have a business where I am earning more money. And that's a wonderful thing. And I'm absolutely grateful for it. But I was dollar cost averaging the same amount every
Yeah.
single week. Well, I was doing monthly, and then now I'm doing weekly. And other accounts are monthly, some accounts are weekly. And I started to realize if I scale up the amount that I'm dollar cost averaging a lot, like to match my income percentage wise, I would effectively be timing the market. And I didn't want to do that. I wanted to dollar cost
Yeah.
average based on my goals. If I say I want to have X amount of money by age 50, by age 40, by age whatever, then I have to dollar cost average a certain amount. I didn't want to change that plan. I didn't want to rock the boat. And that has changed, meaning I gradually changed it, but I didn't ratchet it up. I just
Yeah.
moved the cash elsewhere.
Yeah. So you stuck to the plan
Right.
and you just slowly made it a little better, not just saying, "Oh, I'm going to do this," or
Yeah.
"I'm going to go invest in this," or change behavior. Same in business, probably. It's those small increments. You didn't do the maybe shiny object thing. You know, I'm going to go in Bitcoin. I'm going to go in this. I'm going to do this. Um, I think that's
Well, I
what a
did buy
lot of
Bitcoin, but
people.
not with cash from the bank
Yeah.
is the
Well,
difference.
and you've stuck the course, stayed the course. Now, what do you say to people that they say, "Well, it'll come back," and but just do all the market, don't do this. How is it that you can balance between the two when there's such a divide out there, I feel like, in these two worlds. Like, how are you able to balance between them and see them as cohesive? Can you teach our audience on how to do both and not just say, these guys are evil, these guys are stupid, they're just taking commission breath or whatever, right? And the other way, like, how have you seen it, and what can you teach our audience on overcoming that obstacle?
Well, I think that it's very important to have a solid foundation, and it may be boring and it's not as sexy as everything else, but having a lot of cash value in an insurance product it serves as a solid foundation, and it's
Yeah.
arguably the most solid foundation that you can have in all of financial services. People are going to debate that all day long, but I mean, there's a reason why I do it, and there's a reason why I chose it. The way that I balance the two is I have investment goals, and
Hmm.
like I said, I have a place to store cash. I don't necessarily, and maybe this is a failing on my part, I don't necessarily have any cash value goals. I don't have any insurance goals where I'm like, I want this amount of death benefit. I mean, beyond a minimum, like there's a minimum
Yeah.
that people quote unquote need. Like, you would like to have this. But for me, I'm not sitting up at night thinking, oh, I need this insurance. So I don't have that
Yeah.
goal. But it is it is a foundation, meaning I'm far
Yeah.
more comfortable making a real estate investment knowing that the cash will continue to grow as if I never touched it. I have a little bit more certainty. And there's a paper, I can't remember the author, but it was written in like 2003. It's called The Economic Value of Certainty. And it's brilliant. And it talks about how there is, I mean, just as the title reveals, an economic value of certainty, meaning I am getting a very real return by having a sense of certainty in the background, knowing that even if something fails, even if there's a risk that I didn't anticipate,
Mm.
it
Yeah.
will still, I will still be okay. And we haven't even
I
talked
think
about the
that's
living benefits.
Yeah, yeah, I think that's pretty interesting because I remember watching Shark Tank, and I think it was Mark Cuban saying about how much cash he has in the bank. Should have had in a policy, but just cash on hand, and he probably meant an infinite bank policy that he has it in. But he was like, "I'm sitting on this amount," and he takes a lot of risks, right? I mean, like, he's on Shark Tank, he's buying businesses that sometimes fail, right? But he had a really big, solid foundation cash position to be able to make those bigger plays. And I think that that's oftentimes missed, and being strategic, right, about where that is placed while you're waiting.
Yeah. There are several risky investments that I've made and anticipate on making in the future. And it's like a barbell. So I have something that's very
Yeah.
conservative, then I have something that's very risky, and that's how I use it.
So where have you seen? I mean, you've been doing this now for a couple years, and you've seen people talk about infinite banking on, I don't know, the Facebook groups and other things. Where have you seen them just kind of miss it, and you're like, oh my gosh, they're saying this again, and that is not right, that you just want to like say, let's clear the air. This is not how it works, at least with the work that I've done for you. Maybe not every policy, but what is it? It's, you kind of say, that's not what I've seen.
When people say that you can do it with anything else other than a whole life policy, for sure. When they say, "Oh, you won't have access to your cash for like 10 years," that's
Yeah.
really wrong. I would not have done it if I didn't have access for my cash for 10 years, because it's hard for me to predict what is going to happen and what investments I'm going to want to make in year 9 of my life after starting the
Yes.
policy. That's one. What's interesting is that the people who hate on it the most haven't done the research. There are books out there are YouTube channels, there are podcasts where you can learn. You have to be willing to learn. You can't help anyone who is not willing to learn, unfortunately. I've learned that the
Yeah.
hard way many times in my business, and they don't do it. So there are
Yeah.
people who may learn the basics, but they don't actually do it. And until you have the policy in your hands where you see that here is the cash, and for example, when they say you don't have the cash value for like 10 years, I'm like, and I have it, and I take a loan on day 3 or 4. Am I wrong? Like, did I go to a fantasy land and get the money? Like, where did the money come from? It obviously came from somewhere. And if I'm doing it, it always makes me laugh when people say that specific thing where like, oh, you don't have access to cash value. And it's like, okay, keep on believing what you want to believe. I don't know what to tell you. But I see that so often in everything in life, in like fitness and in marketing, in my
Yep.
business. So I have a marketing business. And if I
Yeah.
tell financial advisors you can get, or this is the campaign that I did with email marketing, and I got X amount of email subscribers for Y amount of cost. And they're like, oh, you can't do that. And I like
Yeah.
refresh my page and I'm like, yeah, it's right there. So it's interesting just to say the least. I'll say it kindly. It's interesting.
Yeah, and I've even had this happen where they were going through the process, and we did the let's say the analysis, right? And then uh, I don't know, he tells me as a massage therapist, right? He then tells me, you know, you've you don't even get the cash for 4 or 5 years. And I was like, no, that's wrong.
Yeah.
If you would have listened to me or even been in the process and not just watched a random YouTube video. I mean, you know, you are guys are listening to a YouTube video, right? Don't just trust us. Go through the process and ask people. This is why I like to have James on, is because he's only been through the process and experienced it, where other people will say, yeah, but you're just selling it, you're
Yeah.
just doing this, and it's not the case. Right. So that's something that it annoys me, because I'm like, dude, I'm trying to help you here.
Well, what's another thing? So I just thought of it because I'm trying to think of like, what do I see? I see the buy term and invest the difference thing quite a bit. And I know that you have a podcast episode about that it originated from Art Williams, and
Hmm.
he basically created the whole marketing thing, and brilliant. Like, a lot of people's lives have been changed by buying term and investing a difference, but they have to do it. So here's a question.
Yep.
Here's something to think about. I, I'm neutral when it comes to Dave Ramsey. I think he's done a lot of good. I love some of the things that he teaches. I'm not such a big fan of some of the other things. I want you to ask yourself, why is it that he says that you should buy term and invest the difference, and that you're perfectly capable of doing it, and that you will take the difference? So if whole life insurance costs this and term costs this, you will take the spread and you will diligently invest it every month. Why is it that he says that, but then he
Hmm.
says that people should get a 15-year mortgage because they definitely can't get a 30 and pay it as if it was a 15? He says, oh no, you're not disciplined enough to do that. You will lose control, and you will just not have your inhibitions will be gone, and you are just not responsible enough to do that. But yet you are responsible enough to buy term and invest the difference. Is it possible that
Yeah.
he has an affiliate relationship or a partnership? I don't know the correct term to use. Is it possible that he has one of these relationships with a term insurance company? Something to think about.
Oh, maybe maybe Xander. I don't know, but
But you're
and I
not
and I do.
responsible enough. You're not responsible enough to have the mortgage that's 30 years and pay
Hmm.
it as if it's 15. But somehow you're going to magically get the ability. Now, I'm not saying that people can't do it. People buy term and invest difference all the time. But I'm just saying to
Yeah.
examine where you're getting your information. That's why I really wanted to stress that I'm not selling insurance. I really don't care if you do infinite banking or not. I really don't care what you believe. I really don't. I genuinely do not. I would love to help people, and I would love to have their lives be changed as a result, but it does have to be right for them. They do have to come to
Yep.
their own conclusion, because even if it can help them, here's the thing. And this was just one of the hardest lessons I had to learn. I had it hammered into my head this year. Even if something can change someone's life, and even if you take them right to the precipice of like, here it is, if they don't
Yeah.
want it, it doesn't matter. If
Yeah.
someone genuinely doesn't want to use something or do something, then it doesn't matter.
Yeah, I think that's something that I've had to wrestle with personally as I help people through and even give them the answers. I mean, you're in the business of marketing and business, right? So sharing them this, knowing how it's going to play out, not knowing what's going to play out in the other ways. I don't know. They could do a really amazing business and they're billionaires, and that was ridiculous. Like, I don't know that, but knowing what I am doing and how I can serve them with unnecessary risks and almost like some real good certainty. Um, I think about this at night, and I've had to even um, like my staff has even said, you need to just forget about them,
You need to
which is
relax.
really really
Yeah.
hard to do whenever you're like, oh my gosh, this is gonna revolutionize their life, and they get in their own way. This happens a lot in money and in relationships and then all this. So just finding that interesting. And as you've been thinking about infinite banking, it is a concept. It is a way of thinking. What are some things that you just kind of again look and say, okay, it's a it's a piece that we really need to consider that we might be missing in our current time that we should take a bigger serious look at maybe.
Maybe the issue of self sovereignty, meaning you would have control, that you're not subject to a bank's denial or approval or even a credit check. And
Yeah.
that's something that I have taken for granted as I have just been using the policies more and more. I don't really care about a credit score as much anymore. Um,
Yeah.
I am very fortunate to be in that place. I don't really have a I I'm not debt adverse, meaning if I were to go out tomorrow and take on a bunch of personal debt, I wouldn't really have my stomach wouldn't be in knots because of it. But it's just a
Yeah.
decision that I made not to do that, meaning to build
Yeah.
the foundation as strongly as I possibly can, and that's pretty much it.
Yeah. So it's just building again, going back to that foundational wealth. And this is something we talk about a lot. And what I've seen a lot and in our world right now. The market is still at a relatively all-time high compared to what it was even 20 years ago, 30 years ago. Even if it goes down, it's still going to be higher than it was probably. Um, and yet a lot of people are fearful. There's a lot of uh, loss that could happen, or they feel like it, and there's not a big foundation built. And what I like about this is it's not a either or kind of tool. It's a both
Mhm.
and,
Yeah,
right? And if people could figure
exactly.
that out, it's a both and. You build your foundation, right? This is why the rich do it. This is so powerful because then you can do bigger risks and that. And people ask me, well, what should I do? Should I invest in this? Should I do that? What would you say is the best investment that you've made personally? The policies, again, not an investment. It's built for safety and stability. It is a better than a savings account with a death benefit. But what is something you think that people need to really consider when it comes to investing in today's world?
think you need to look at your alternatives and examine. I kind of think of it like a video game, kind of, meaning picture a multiplayer fighter game where one player might have super speed and another might have super strength, but not super speed. And the one with super speed
Yeah.
has no strength virtually at all. But then you have a player, this is typically the one that you begin with, that is a good all around player. And it's not the
Yeah.
best at any one thing, but it's good. It's a good fit. And it's something that
Yeah.
you can use and you obviously learn the game and benefit from that. That's not a perfect analogy, but it's close to how I feel about the infinite banking concept. It's
Yeah.
not the best at any one thing, but it's certainly not the worst at any one thing at all. And it is a great it's a great way to feel more secure. Again, there's an economic value of certainty, whether you think there is or not. You can just Google the
Yeah.
economic
Yeah.
value of certainty paper, and you can probably link to that in the comments. This is not from me. This is not my original thought. This is real research from other people. So there's that. But then there's also the ability to invest in myself when the opportunity comes. One of the reasons why I wanted to bring up the fact that I personally just was holding a lot of cash for a long time because I had a dollar cost averaging investing plan and I just wanted to stick to that. Um,
Yeah.
that is something that people really need to consider. And I think as far as best investments, I think the best investment is in myself. And here's something that's interesting is so I don't want to talk too much about my business, but the business is called The Advisor Coach. And the reason it's named that is because in 2015, and for the first couple of years of the business, I coached financial advisors. And that was fun for a lot of reasons and not so fun for other reasons, namely repeating myself constantly, because that's the nature of one on one coaching. But in essence, what I would do is I would go to financial advisors and I would say, for example, I have a direct mail system that is now this is I didn't do just direct mail, but this is just an example.
Yeah.
I would say I have a direct mail system that is guaranteed to get X results. And the reason I can guarantee it is because if it doesn't work, I will give you back your investment plus 10%, or plus I'll donate $500 to the charity of your choice, or I'll give you a gift card. I would change the offer because that's what marketers do. And think about this, guaranteed to get results. I would do all the work for you outside of like an initial 1 hour call where I know what to put in the direct mail and I know what to send to what list. So I need something from you. I need like an hour. But
Yeah. Yeah.
if it does not work, you get all of your money back plus something else. And people
Yeah.
still would say, no, I can't afford it. Well, what can't afford? How can you not afford? And it's so interesting because it illuminated a certain mindset, meaning even when something is staring you directly in the face and someone is
Yeah.
personally guaranteeing it, and you just still say no because of your fears, your irrationality, your beliefs about.
Yeah.
Here's something that might trip people up. When people don't invest in themselves, what they're really saying is that they're not worthy of investing in. And that's scary for a lot of people to acknowledge. But it's true. If you don't invest in yourself, you're just telling yourself again and again, because we, as Dr. Phil likes to say, we think 10 times faster than we talk. So if you say it, no thanks, I'm not
Yeah.
interested one time, you just told yourself 10 times that you're not worthy of investing in. And that inflicts tremendous psychological damage. It is disheartening because even when people have all the information about something like the infinite banking concept, they
Yeah.
could still pass.
Yeah, and I do think that's the hardest part, and part of what I do is the profit first system. It's a psychological thing. Paying yourself, being able to make sure that you, as a business, take a profit, because God forbid we get a profit from our business, you know, and pay ourselves, but yet we'll put it into the market and want return right into those big guys. And I think there's an interesting thing about just our psychological makeup, what's been said or done over the past years, that we aren't valuing ourselves. And that's what I love about life insurance. In essence, it is putting a value on you, human life value actually,
Hmm.
that your family gets in case you were to retire to heaven, right? And I love Nelson Nash, as far as he's the implementer of this, and uh, or founder of the infinite banking concept. He wasn't really talking about math very much. He was just saying understanding how the financial system works, understanding the flow of it, and a lot of it is emotion. It is thinking like a bank, being the bank, not just uh, letting the bank do its thing. Um, and that idea of investing in us, right? And this is something that you just mentioned. Your biggest investment is you. Your biggest investment is your business. A lot of times people come to me and say, um, well, now that I've done this, should I do crypto? Should I do
Right.
this? How do you think my business is going to go? And on my side, within the policy, here's the cool thing. I know for a fact, as you set up this business model of the policy, it will be a profitable business. First few years, there is a cost, but over the course of 3 years, it will become a profitable business. There's nothing you can do about it, right? That is amazing to me to be able to
Yeah.
build that stability. But yet, I see a lot of business owners, and you might see this. Um, our profitability in our business, it takes a little more time. You've been running a business for a few years. How hard was that in the beginning? And
A
what
lot
can
of
you
years,
speak
decades,
to?
over a
What
decade.
can you speak to business owners who just think, "Oh, well, I'm going to do this, and my infinite banking thing will do this for me," and um, invest in yourself, but also thinking about other areas. Like, what do you think is a good answer for that?
That's a great question. We'll put a pin on that, and because you asked me earlier, what are some things that I see that are just not true when people talk about the infinite banking concept? I
Oh
saw a
yeah, yeah.
comment. You mentioned Nelson Nash, so I thought of this. Someone put a nasty comment online, and they said, "Oh yeah, that Nelson Nash guy just wants to get his insurance commission." And this was like 6 months ago. So can you tell me what's wrong with that statement?
He's dead.
He's dead. Yeah,
Uh,
he's dead. I
yes.
don't know what insurance commission he's gonna collect, but he's dead. But
Yeah.
anyway,
Yeah.
back
He
to the
has
business
died,
thing.
and he was more about changing lives. That's for me. Whether they do a policy with me or not, it
Right.
it doesn't matter.
Yeah.
But I do want to pay my bills, right? And I think he wanted to pay his bills. But for me, I think he's a person of faith. He wanted to change the world. It wasn't about money for him.
Yeah. Well, it's just I thought it was, kind of
And
funny.
he's not around.
Yeah, he's
Uh,
literally he can't get the commission from you even at all. But anyway, the business thing, here's here's something that I would charge for in, like, a private consulting arrangement.
oh,
When investing
here guys go. Yeah,
when
he's
investing in your business, and I said this earlier or I alluded to it in personal investment. When investing in your business, you have to look at the alternatives and you have to look at the potential for a return. I will give you an example. In the past 3 days, I've spent maybe 1,000 to $1,500 on online ads from LinkedIn and Twitter and Facebook. So about 1,000 to $1,500. I mean, it's gonna be more as because it's running
yeah,
today. I know in about 6 weeks, I will have all of that money back from purchases that people make within my business because I have products that
yeah,
they would like to use, and I'm grateful for that. After the 6 weeks, I have a positive return on investment. Does that mean I should take $100,000 and pour it into ads? Well, not necessarily, because there's a diminishing return. I, this is
Yeah.
hard for people to understand. I don't know what Apple's market cap is today. Um, let's just say it's $1 trillion. If I gave you $1 trillion in cash and I told you to create Apple, you could not do it. You could not make Apple. If I gave you the market cap of Tesla, you could not do it. If I gave you the market cap of whatever Microsoft, you could not make what Microsoft is here. It's just not an investment that you couldn't replicate it. Um, the reason that's important to understand is because even though I might get a 200% ROI on my ads, there's an upper
Yeah.
limit to how much cash I can put there while getting that return on investment. Eventually, there's a mathematical formula. Now, it's hard to make these things because you don't know every single variable, but in your mind, abstractly,
Yeah.
you can understand that there is a point at which that the return on investment starts to go down, 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 and back to zero and eventually negative. I can't take $100,000 and shove it into ads tomorrow because my return on investment wouldn't be there. So, well, let's think about something else. Um, Real estate, for example. Can I just continue to shove the money in? Well,
Yeah.
sure, kind of, maybe. Who knows? Uh, Investing in a book. If I buy a $20 book from Amazon for Kindle and I get a 10x return on my investment, that's wonderful. That's far better than 5%. That's far better than the 8 to 11% historical average for the stock market, depending on the study that you read and the times that you use. That's
Yeah.
incredible. 10x from a book. That's wonderful. But can I take $100,000 of cash and put it into books and make $1 million, like in a relatively short period of time? No, I
Yeah.
can't. So there is a finite constraint to what I can do with my capital. So past a certain point, you're just trying to get a return. You're just trying
Yeah.
to get something that's not negative, that you're not risking it. I hope that example that probably went over a lot of people's heads, but if you can get that, I think you can understand that as you have more and more cash, and as you're making more and more investments, and as you're making bigger investments, over time they tend to get more conservative.
Yeah. Well, and again, thinking about some of the stuff that I've done in this game analogy, and we'll kind of land the plane here, is the infinite banking concept, the setting up a policy has helped me be able to do a lot of awesome things. I started whenever I had a coffee shop, got out of some debt, the tailwinds. That's what again Nelson Nash says. There's a lot of wind going against us that stop us from moving forward, right? And so this just helps us to glide through a little easier. Not easiest, right? Like
Mm-hmm.
there's still friction, but it helped me overcome some things. I was able to use it for buying a house, buying a commercial real estate, doing the podcast factory that we had, and it just helps amplify those things. And it's almost again, as you were saying with the game, right? I'm at stage one whenever I was born, right? And sometimes you have kids that maybe I'm going to help them be in stage three when they're at a certain level, and I was not that, but
Mm-hmm.
but this is the we are in the game of life. So how do I then use this and level up and use it? And I'm excited because I'm like I don't even know what to do with all my uh, cash value, and as I grow in this, and whether I learn ads and all of that, but being a learner, this is the thing that I want you guys to pick up on. James is a learner. He questioned it, but didn't just say this YouTuber or this guy says it. He brought it into himself and asked questions and found his own opinion, not just what Fox News or CNN says, but what does he think? And I think that's why it's such a hard thing to sell and do because it requires thinking.
You know what's interesting? So you keep saying these things, and so earlier I couldn't think of any answers to your questions, but as you talk, I keep thinking of them. So another comment I see all the time is that they're just out to sell you stuff. And again, I don't sell insurance, but I see the comment, oh, these insurance people, they want to, and you said commission breath. That's kind of funny, but they just want to sell you. Well, holy moly, they picked a terrible thing to sell, because if they were good salespeople, right, then they would pick something else. These people with natural sales abilities would sell tech software where they could make millions. They would sell
Yep.
cars, they would sell planes, they would sell private, like, little boats. They picked an awful product. Can you imagine saying to yourself, I'm a wonderful salesperson. I've learned from Tom Hopkins and Brian Tracy and Grant Cardone. I've invested in myself to become a great salesperson. And I love sales as a skill. I think it's a wonderful tool that you can use. I love people who are great salespeople. But can you imagine if you invest all this time to become a great salesperson and then spend your human capital trying to sell a product that people already think is bad, that takes
Yep.
months to learn about, that people brush off immediately? Why would you sell that if you have the skills? So I've never understood that when people say, oh, they're just trying to sell you something. Well, they picked a terrible product to sell if the goal is to sell, and the goal is to just sell as much as possible. They are in the wrong industry. If they really
Oh,
are great salespeople and that's what they want to do, they should be somewhere else.
oh man, this is a tweetable right there, because I think about this as I used to. We were planting a church, right? We were starting a church, and I was thinking about, man, converting people and talking about Jesus, and that you have to drink the blood and body of Jesus. And then I move into this industry, and I have to. It's not a quick sell. I have to
No.
say, all right, here you go. Now we're going to do a long application, and I'm going to ask you very big details about your life. Uh, and on top of that, I need your blood,
Yeah, you
and
literally need their
you have
blood.
to. Uh, and then after all of that's done, and you get qualified, then you can. They're going to vet you to see if they want to sell you, basically. Then we can go forward in 6 weeks. And then I have clients that say, I don't think so. And I'm like, oh my gosh, I went through the whole 6 week process, and I could have sold a jet,
Yes. Yes.
or done stuff and I think about the other side of the business, assets under management. I could go into that world, sell something, and who cares? Now, it's not, I mean, it's not that I wouldn't say who cares, but I'm not
It's way
responsible for
easier.
anything. Yeah. And it's so frustrating, but I know that from a point of conviction, that what I do is like absolutely important and needed, and I will move towards that because it's that important. And when I hear people like Dave Ramsey say, "I'm just out to make commission, and I'm a evil person," I get offended. Unfortunately, I mean, maybe not unfortunate, but um, and I think that's a really powerful statement that you just said there.
It's like, just think about it. Like, think about it logically. If you're one of the people who is watching this video later or listening to my voice, and one of your objections is, "Oh, they're just trying to sell me." I mean, I'm telling you right now, there are many other industries that if they really wanted to be salespeople, they are not the brightest if they got into a product that requires your blood and an hour-long application
Yep.
at least. It just wasn't very smart. And since you brought up
Yeah.
like the church, like Corinth, this is how I view it. I view investing in this way. It's like Corinthians says that the eye is not the body, and that the ear is not the body, that you need both the eye and the ear, and the eye can't be
Yeah.
upset because it's not the ear, and the ear can't be upset, and it just goes on and on and on. Um, I know that insurance alone is not the body, but investments alone, it's also not the
Yep.
body. So I'm creating a body, And I know I need eyes, ears, arms, legs. I need it all. And I think if anyone is just trying to tell you, just get eyes. This is not, again, this is not me. I've given you the economic value or of certainty. I've given you the HELOC from Bankrate. I'm trying to give other sources because I know people are just going to be like, this is just a random guy on the internet.
Yeah.
This is literally in the Bible. This is a biblical principle. I didn't write it. I didn't put it there, that a body requires multiple parts to function. And I understand people say, oh, it's talking about the church and spiritual gifts. I understand that. But it's, it applies there too when creating a
Yeah.
financial body.
And I do think, yeah, you are absolutely correct. And when, again, as I'm doing financial analysis, I feel like I'm a therapist sometimes, because I'm doing all of this and they're like, yeah, they want me to solve everything. And I'm like, oh my gosh, these guys have marriage issues. They have, they need to make some money.
Yep.
They have a sales problem. Uh, and, there's just so many other factors that I see. And this is just one piece that can amplify it. Uh, and it's just a matter of, hey, it's just a concept that is a powerful one. And we are leveraging companies that have been around for over 100 years. So we're able to have some more stability in an unstable world to overcome the obstacles, especially as small business owners. So I know we've been going for a while, James. Any closing thoughts that you want to just say, any plugs, anything that you want to say, hey, do this, um, whatever. But what would you like to share?
I would say if it's okay if someone is interested in anything, not just infinite banking, but maybe investing and maybe real estate, maybe crypto, ask a lot of questions. Don't be afraid. You're not going to ask a question that the person on the other side of the table hasn't heard unless that person is on day one. You're not
Yeah.
asking the dumbest question they've ever heard, statistically speaking. You might be, but chances are that you're not. And don't be afraid to ask what you think are the hard questions. If you think something is too good to be true, just say that and say, what if X happens? What if Y happens? And just get the information, because people can't decide for you. You are still a sovereign individual. You can make your own choices and you can make your decisions. But I think to serve you best, you need to have the information, and you have a way to get it, and that's by
Yeah.
asking. And but here's the thing, if you don't like the answer, then factor that into your decision. But not asking ensures that you won't get an answer. So I
Yeah.
would encourage people to ask the questions, even if they think they're hard ones.
And ask that of yourself, self reflection. I was literally talking to Amanda today saying, I wish that people asked these hard questions that they're asking of us every day, of their 401ks, of the put money that they're just blindly putting in because their employer um, put them in without even asking them, right?
Mhm.
And I wish that we would think about that more holistically. So, guys, thanks for being here and joining us. If you want to reach out to James, go to Financial Advisor Marketing. Wait, what is it? The Advisor Coach, Financial Advisor Marketing
It's a
Podcast.
podcast. Yep. Mhm.
And Advisor Coach is the advisor coach for him. And he is an amazing person. He really leads with integrity, and I think that he's in a just really serving his clients well. So thanks guys for being here, and thanks James for doing this live with me, and for how you are embodying the infinite banking concept in your areas and in your family. And I know your uh, protege, the people that will come after you, are going to thank you for the work that you're doing and have done in the past 10 years, uh, even those people that don't exist yet. So,
Yeah,
uh,
it'll be cool.
awesome. Thanks for being here.